Welcome to the Wednesday edition of Tech Stocks Daily, where we serve up all the sizzling tech news with a side of humor and brevity. Today we've got a feast of fascinating stories to dive into. First, Symbotic's in hot water with allegations of securities fraud, making their stock nosedive faster than a roller coaster. Then it's over to Microsoft, navigating through stock evaluations, dodging Bitcoin buzz, and facing off with Google over a cloud hosting feud. On the lighter side, Magnite's making big executive moves while gearing up to conquer the ad tech world. Plus, Google is teasing us with Project Mariner, an AI prototype that might just redefine multitasking. Stay tuned for all that tech-tastic goodness. Hey tech enthusiasts, today we've got a robotic roller coaster involving Symbotic Inc., a company that specializes in warehouse robotics systems and seems to have mishandled its numbers faster than you can say revenue recognition. Investors have been left shaking their fists at their stock portfolios and dialing up their lawyers quicker than Alexa can set a reminder for their next Tesla maintenance. So, what in the digital world is happening with Symbotic, and why is everyone trading legal briefs over database scripts today? Symbotic is entrenched in not one, not two, but three separate legal actions over alleged securities fraud. Why? Because they've allegedly been keeping their accountants busy with creative financial figures throughout 2024. The trouble swirls around their premature revenue recognition, a fancy term implying they called dibs on earnings faster than prepper camps hoarding canned beans during an apocalypse. Consequently, their statements on business operations were like those fake phishing scam emails we all get, full of misleading information. First off, Bronstein, Gewurz & Grossman LLC jumped into the legal playground believing certain Symbotic execs might have painted their financial results as overly rosy. The firm's lawsuit covers Symbotic trades made between February 8, 2024 and November 26, 2024. Investors are fuming because, once the actual numbers were revealed, losses became as inevitable as another Meta headgear release. Next, Levi and Korsinski LLP have filed suit, communicating similar grievances and offering their legal muscle. Hence, if you felt burned by some Symbotic trades this year, they just might have your back in this legal vendetta. Both lawsuits imply that Symbotic not only over-accelerated revenue recognition, but also tangled up communications about future operations. And while the corporate popcorn's still popping, Gerard Sharp LLP joined in on the action from the sunny coast of San Francisco. They began scrutinizing these suspicious securities maneuvers after Symbotic missed a crucial filing deadline for the 2024 fiscal year. Their failure to file on time was linked to errors in revenue recognition, the kind prone to cost overruns from certain deployments, not exactly a confidence booster. That revelation sent their stock into a nosedive, plummeting about 40%. Imagine it's like seeing your cryptocurrency portfolio after a celebrity announces they're offloading their NFTs. All three firms want to help recoup potential losses for those holding Symbotic between those pivotal early February and late November dates of 2024, without requiring victims to serve as lead plaintiffs or remit out-of-pocket fees. Symbotic, meanwhile, is in just about as much hot water as an AI that mistakenly tweets a politician's scandalous past cat memes. So folks, whether you're keeping an eye on your warehouse robots or your stock investments, Symbotic's story is a thrilling reminder that not all tech is as frictionless as a freshly waxed touchpad. Stay tuned for how this unfolds. Who knows, we might see them cleaning up on Wall Street as skillfully as their bots clean up warehouses. Today's tech news spotlight shines brightly on Microsoft, and here's the breakdown of why this tech titan is stirring up headlines. First up, there's a comprehensive analysis positioning Microsoft against its competitors in the software industry. If you're following Microsoft stock as religiously as a cult classic TV series, you'll appreciate this. It turns out Microsoft's price-to-earnings ratio, price-to-book ratio, and price-to-sales ratio are painting quite the picture. Their PE and PB ratios suggest that the stock may be undervalued compared to industry peers, sparking optimistic prospects for growth. On the flip side, a PS ratio that cramps beside higher-than-average figures suggests an overvaluation drama. But it's not all stock tea. Microsoft also flexes stronger operational performance with a robust revenue growth rate and impressive profitability metrics, like their jaw-dropping EBITDA. And while their return on equity isn't winning any beauty contests, it benchmarks respectably amidst fierce competition. Now onto the crypto campfire tales. Justin Sun, the cryptocurrency maverick, just lobbed a cheeky dig at Microsoft for its reluctance to jump on the Bitcoin bandwagon. Shareholders recently shot down a proposal for Microsoft to consider reserving some of that juicy cash for Bitcoin investments. Sun humorously suggested they shouldn't even bother until Bitcoin's price hits a jaw-dropping $1 million. Microsoft, preferring stable ground stability over crypto waves, decided against Bitcoin, citing concerns over volatility. Sun's cannonball into splashy headlines certainly kept tongues wagging. But wait, there's more. Google's turning up the heat with Microsoft over a cloud hosting feud that's causing a rift larger than those you see in soap operas. Google has knocked on the doors of the U.S. Federal Trade Commission, asking them to dismantle Microsoft's exclusive cloud hosting arrangement with OpenAI. Their concern? Well, Google's crying foul over the added costs for cloud customers bound by Microsoft's contracts. There have been spats before. Google and Microsoft have squared off over competitive practices in cloud services, laying down a gauntlet of accusations of indulging in anti-competitive behavior. Google's recent plea to the FTC suggests that the cloud war is sizzling past the simmer. Overall, the fascinating and multifaceted notes we're hearing from Microsoft today range from savvy software investments to crypto controversies to cloud server disputes. Whether it's stock performance or strategizing alliances or enemies in the AI sector, one thing is clear: Microsoft's in the news lineup's front row, center. That's the tech quarrels, titillations, and quantitative analysis buzzing today's news beaten path. Who said technology wasn't loaded with drama? Today, the buzzing tech world is abuzz with news out of Magnite, the globe-trotting maestro of independent sell-side advertising platforms. If you're wondering what groove they're dancing to, it's all about fresh moves on the executive ladder. Get that popcorn ready, because Sean Buckley and Katie Evans are taking the spotlight. Sean Buckley, once the company's chief revenue officer, is now tapping his way up to the beat of President Revenue. Yes, Master Buckley is the revenue wizard behind Magnite, which he joined via the SpotX grand entrance back in 2021. With a resume flashier than a limited edition holographic trading card, Buckley's past credentials include dabbling as COO and CRO at SpotX, where he supercharged the platform's enchilada of media management solutions. Now let's sparkle some confetti for Katie Evans, who soared from her Chief Operating Officer post to her new title, the Mighty President, Operations. All hail Madam Evans, a Talaria veteran who joined during that epic merger moment in April 2020. Word on the street is that she's now boss lady over all things client success, sales ops, tech ops, and oh yes, business intelligence. You don't want to snooze on that bisection. It sounds cool enough for a spy movie subplot. CEO Michael Barrett didn't shy away from the mic either, serenading Sean and Katie with praiseworthy of hit song lyrics. According to Barrett, the dynamic duo has sparked a positive tidal wave within the Magnite shores, pushing the tempo toward live sports innovations and broader shores in programmatic CTV adoption and DV+ goodies. It sounds like Magnite is ready to rule the broadcasting dimension faster and more furiously than Vin Diesel at a red carpet car convention. For those just tuning in, Magnite's bright lights cast shadows across prestigious landmarks like New York City, the scenic hills of Los Angeles, and even way down south in Sydney. Imagine a mighty global operation where publishers cash in on their content across every imaginable screen, from TV to online videos, kept pristine for brands craving high-quality, brand-safe ad inventory. And they're executing ad transactions by the billions each month. It's like playing Monopoly, but on a planetary scale. What's next for Buckley and Evans at Magnite? You've got a global orchestra of operations led by these two, who will undoubtedly conduct the Magnite Symphony into new harmonies, faster than sunlight dancing over an azure sea. From strategic executions that are laser-focused and more efficient than a caffeine-fueled coder's all-night session, it's clear Magnite wants to be the Einstein of efficiency as it ventures into its 5th year. That's how this tech titan is making waves today, folks. So stay tuned and keep those tech glasses polished, because things in the ad tech world are never dull, with Magnite jamming at the helm. All right, tech enthusiasts, put on your seatbelts, because Google is revving up its engines in the AI race with something freshly baked. Yep, today we're chatting about Google's latest AI prototype, codenamed Project Mariner. This shiny new bit of tech got unveiled recently, and it could be the next big thing. Perhaps even the elusive killer use case that all AI nerds out there are eagerly pining over. So what's this Mariner all about? Well, picture it as a Chrome extension with a brainy twist. It's powered by Google's own Gemini 2.0 technology. But hold your digital horses, because it's still experimental and not available to the general public yet. Sorry, eager beavers, but there's a trusted tester waitlist for those who want first dibs. What makes Mariner truly fascinating is its ability to operate within your browser, using something Google calls strong multimodal understanding and reasoning capabilities. Essentially, it means this prototype is designed to automate some pretty complex tasks across different websites for you. Now, I don't know about you guys, but I wouldn't mind some AI magic dealing with my ever-growing list of online errands. In the promo video that Google released, Mariner flexed its muscles by using a Google sheet of company names and scouring the internet for their contact information, while narrating its thought process, of course, like a true AI philosopher. However, don't expect it to start working as your background assistant yet. The current prototype needs to be front and center while it does its thing. But it's not all champagne and confetti. Google itself pointed out that Mariner can sometimes, well, mess up. And with speed as an ambition, they're working closely with developers to optimize the zen between interaction and execution. Better smooth than sorry, as they say. Now, with major tech giants tossing billions into AI, one question still casts a shadow. Will AI find its all-important killer use case? Just like Excel gave Microsoft wings and iTunes was manna from heaven for Apple, what's AI's moment to shine going to look like, and could it be Mariner? So what do you think? Is Project Mariner the stepping stone towards AI's big league acceptance? Or is it just another chapter in Google's adventure skydiving through technology spheres? Let me know what you're excited or skeptical about regarding Google's AI ventures. I'm all ears. Leave those zingy comments below, and let's get the conversation roaring. All right, tech fans, let's dive into the stock pool and pick a potential treasure or a trap in light of today's juiciest headlines. Now, while I don't have a crystal ball, I'd focus on Microsoft in today's holding, selling, or buying contemplation. And here's why. Microsoft finds itself riding multiple business waves, some springier than others. On the stock measurement front, we've got mixed signals. Their price-to-earnings and price-to-book ratios suggest there's some unexplored upside against industry peers, kicking in optimism vibes for those ready to catch the stock at potentially bargain prices. However, their price-to-sales ratio, resembling that post-office party warm salad, tells us overvaluation fears smell like old cubicle coffee. Add into this their dazzling revenue growth and profitability knack, epitomized by some jaw-dropping EBITDA yelling cha-ching, even if return on equity doesn't make the jaw drop. So if you pepper this financial zest with a hearty seasoning of robust business structure, it can argue for a hold or even a buy strategy at certain buy-low entry points. Motivating this hypothetical move, here's the beef of it. While the crypto world glances jealously in the rearview mirror at Microsoft's decision to steer clear of Bitcoin bedlam, the company remains steadfast on a less volatile, cash-driven course. Smart depends on your risk palette. This illustrates their conservative cash management could paint warm or worrisome tones, contingent on your view of crypto's future landscape. Moreover, fighting it out with Google over cloud hosting exclusivity speaks to Microsoft peeking through tech windows broader than cloud puffs. Google's shenanigans with the FTC, asking them to topple Microsoft's cozy cloud deal with OpenAI, reflects competitive heat, but also lays bare potential near or long-term legal liabilities. However, remember that conflict also hints Microsoft's stakes in AI and cloud, potential zones for disruptive strategies. If thrilling news of Google challenging their cloud dominance doesn't spook you, and you find Microsoft's tech ventures cuddly because of their less economically tumultuous security blanket mixed with a flicking futuristic flair, you might argue for holding out in quirky expectation for when those tech seconds strike pure gold. But here's the golden rule. Always conduct your own research, buddies. Each investment bears adrenaline-pumping possibilities or stress test sleepless nights, so evaluate thoroughly based on your financial profile. Only leap into the market buzz after fine-tuning your research whistle. Wow, what a whirlwind day for the tech market. From Symbotic's financial drama garnering more lawyers than a courtroom TV series, to Microsoft's delicate dance with stock valuation and heated rivalries over cloud supremacy with Google, the headlines have had us on the edge of our office chairs. Meanwhile, Magnite made some power moves on the executive chessboard, aiming to dominate the ad tech world. And Google unveiled a potentially game-changing AI project that's giving us a sneak peek into the future. Whether it's Symbotic's robotic miscalculations shaking up the market, or Microsoft's strategic maneuvers through their sea of financials and cloud skirmishes, each tale is a testament to the crescendo of excitement in the tech world. But we're just getting started on this tech journey, so stay plugged in and engaged with us. If you found today's rundown helpful or entertaining, like, subscribe, and share the buzz with other tech fans. And don't forget to tune in tomorrow, where we'll explore more tech happenings that are bound to leave you nodding, "I did not see that coming." See you then.